Closing beat, everybody. Happy Tuesday. How you doing out there? Good? Good. This is a quick show that we do called The Closing Beat. We've got a lot to cover today. It's a stock market update show. We go over the good, the bad, and the ugly, share a lot of data with you because we're data-oriented here. We're also educational financial advisors. We believe in educating. So weekly, we do classes for customers. We do emails every week, and they're not just your general, like, sort of boring emails and things like that. We fill you full of all of the studies that we do here at Jazz and share those with you as well. Also, any updates as far as what other advisors, the bigger boys, are telling their high net worth customers and everything like that. And we try to teach you, just teach you a little bit about what's going on. So when things are good, you know what to expect, and when things are bad, you know what to expect as well. We're also playing a game. It's called Guess the Dow. Every Friday we announce the winner. If you can tell me where the Dow is going to close, you're the closest without going over, we'll send you a $100 gift card. No strings attached, no marketing, no emails, games played, anything like that. And if you're one of our customers, we can credit your account $100, even if you have already hit your max for the year or for last year, whatever you'd like to do. We will leave it up to you. Also, our Jazz Artist of the Week, Brian Bromberg. I saw the comment down there, man. Elephants on Ice Skates, man. Great song. Great album, by the way, if you happen to, I don't know what the album's called actually, but great song, really kind of a funky, sort of laid back, smooth jazz kind of song if you like that. Brian Bromberg, like when I'm just sitting around, like that's what I imagine it sounds like when I try to play the bass. It doesn't, but that's what I think it sounds like. So hope you'll check that out. Enjoy that one there. Hey, stock market wise, we got 560 point gain on the Dow, 84 on the S&P, 323 on the NASDAQ. If we look at the S&P 500, you can see we're working our way in the halfway point. Technically, we're a little over halfway here, headed back to the 50-day moving average. We commented and continue to comment, expect chop in this area. Some good days, some bad days, a little back and forth, little wild action in there. And we got that. Yesterday, volatility. Today, reversal volatility. Everything looking good there. Well, if you're a bull, you like what's going on there. You like what's going on in the NASDAQ as well. Incredibly strong day for tech stocks there. Strong day, 4.5% gain to the upside. That was your strongest index of the day. The Russell 2000 was the weakest, but still a respectable day there, a respectable day, up 2% on the day, still lagging behind the overall markets there. What's going on? What's going on out there? Why is everybody so excited today? Well, virus-wise, you've got a sharp drop in the number of deaths overall. You've got New York, New Jersey, California, Michigan, Connecticut, Massachusetts, and many others showing a really sharp drop-off in the number of deaths. It's sad that we're talking about that, but that's what people are looking at, seeing that as a positive sign. Number of new cases also doing well, and we're starting to shift the narrative back towards opening the economy. Maybe in a really thoughtful way, I hope. But that's the discussion being had out there. A couple governors of individual states have already come out with their plans and how they plan to work with the federal government to open up the economy again, get people back to work and out of their houses there. We have earnings season getting started really officially today, getting started with all the banks. We're going to cover some of that today. We started off with 3 companies missing on earnings, 2 beating, and 1 came in as expected. That's Fastenal, but we're just getting started. That's only 6 names out of, well, thousands that we're about to go through. So that's what's coming up there. Also, as far as earnings season goes, on our show at 3 p.m., outside the virus, we're talking about option pricing. If you're an option trader, you might want to take a look at that. I sort of went off the beaten path there, talking about volatility and how it's being priced into this earnings season. The average expected move for the average S&P 500 stock is 13.3%. Way above any historical norm. Went back 25 years, as far back as I can go, with the data to look at every single company. Yep, looked at every single company. Can't find a moment in time in the last 25 years where the average expected move in the S&P 500 for an individual stock was 13% plus or minus. Just doesn't happen, right? That tells you that there's a lot of uncertainty around this earnings season. Also tells you to expect a whole heck of a lot of volatility, all right? So that's what we've got there. Today, by the way, awesome lesson on you know how I always say the bank stocks and tech stocks. You need the bank stocks, you need the tech stocks to get anything done. Today, intraday, was a really, really good day to see that. And I'm just sort of stalling while I pull this up here. Shared this on Outside the Virus as well. But if we take a look at the banking stocks today versus the S&P 500, you can see clear as day when the banking stocks stopped the stock market rally. I'm going to go over to the charts here and show this with you here. We've got the S&P in purple. That's your bright purple line there, percentage gain or loss on the day. You've got the financial sector in orange. Notice how to start the day, the first half hour of the day, both trending higher. Tech stocks trending higher, everything looking good. Then financial started to roll over about 10:30 today. it started to pull back, right? Look at how as they pulled back, the market lost all steam. That was it. That was all that happened through lunchtime because the financials pulled back at the end of towards the end of the day as they started to recover. You got a small little bounce in the overall stock market. Tech stocks helped out everything today. If I put tech in there, that's your light blue line, you can see how tech was able to hang in the rest of the market, hold everything up while banks took a break. However, the stock market couldn't get anything new done. It wasn't a 1,000-point day because we just didn't have the banks participating. They did put in a gain by the end of the day. However, it was well below the overall stock market there. So just something cool I wanted to share with you guys there. We'll go through all this other stuff in just a second. The stay-at-home stocks. Do you know what this is? The stay-at-home stocks that people are talking about out there, these are your Netflixes, Amazon, Zooms, things like that. They continue to outperform the overall market. So if you're looking for those leaders out there, take a look at this chart here. We've got the S&P this time in hot pink. It's going to be the lowest line there. If we look from the start of the virus decline there, that high, that February 19th high, you've got the S&P still down 16%. In fact, that's where we finished. We're down 16%. From the highs there, so a little work to do, but hey, it's only 16%, right? If you take a look at some of the stocks that have outperformed, you got Zoom there in purple, Netflix down here in orange, you've got Take-Two in brown, light brown. That is the gaming stock there. You've got Microsoft in there and Amazon, all outperforming overall. If we take it a step further and we look at how far they are off of their February 19th high, got a couple Instagram tweet sort of things going out today. Look at their off the highs here. It's a little bit messy, but stick with me here. You got 0% up here at the top. This would mean that it's either above its high or right at it, and in this case, we're talking about right at its high. You have look at all the stocks here. You've got in orange Netflix. You've got Amazon hitting new 52-week highs today. You got Take-Two. They're all above their February 19th highs. Those that still have a little work to do. Microsoft's got 7% before it gets over its February 19th high. And then Zoom, volatile stock. You could see it's a hodgepodge of a mess in there. But you got a 10% gain that it needs, which it could do in one day, by the way, to get above its high. The S&P is still sitting around 16% till it gets to its highs. The point being, FANG used to be the focus. Now we've got this sort of stay-at-home stock thing. Those are the stocks that are leading the way if you care to take a look through all of that, if that's something that you're into. Just something extra I wanted to share with you there. All right, if we go through well, the videos. Hey, tomorrow I got a video coming out on how to be a stock picker in a stock picker's market. I'm going to go through an exact example, one clear example, so then you could take the knowledge there and go forward, do what you got to do with it, because this is a stock picker's market, whether you believe in it, like it, hate it, love it, whatever, it doesn't matter. This is a stock picker's market, and if you are an active investor or more of a short-term trader, it's some of the things that you want to take a look at. And then on Friday, our FinTips video is going to be on a study that we did on should you buy stocks that get government assistance. Is there any advantage there? Because they get the government assistance, do they recover faster? Do they perform better? We're going to go through that on Friday if you want to take a look at that. All right, let's go through our sector breakdown for the day. We talked about the banks already holding the markets back. Still a positive day, but that kind of put the cap on the rally there. You want to see what's going on. There you go. So we take a look at banks there, just holding near the highs, up about 0.5% on the day, holding us back there. You got earnings and JP Morgan. Not good. It's JP Morgan lower. If you follow our stock madness, I've got JP Morgan going against Molson Coors. It's just how it panned out there. Molson Coors is beating my JP Morgan at the moment. Can I show that? Yeah, here it is. So if you look back, we got a 2-week stretch there. Molson Coors currently trading 8.5% higher over the last week and a couple days. JP Morgan giving back some of that today. I want JP Morgan to move forward, but that's where we stand there, and that's why the banking stocks, well, there were other earnings as well, but that's one of the things that kind of held the banks back today is earnings, and tomorrow probably as well. Retail, you got 3% gain on retail overall. It was a broad rally. However, you've got names like Chewy hitting new 52-week highs. Rite Aid in the mix there. That was a stronger, more relative strength stock today, about 10% on the day. And Grubhub, despite the lawsuits there, added 5.5% on the day. Healthcare is now officially through the 200-day moving average. This sector has recovered the most, now getting to over 75%. It has recovered of its virus decline, meaning from February 19th to March 23rd, we've recovered over 75% of it. That continues to be one of the stronger ones there. Up over 30% since hitting this low. That's only 15 trading days ago. Give you an idea of how fast that one is rallying there. Tech stocks today, these were your leaders, up 4% on the day. Microsoft, which makes up 20% of the XLK, was one of the leaders, up 5.5%. That led the way. You also had the FANG stocks, but also, well, Apple was one of those. But you also had some of the chips in there as well. NVIDIA, if you've got that one, you did good today. And AMD, just an amazing run on AMD, up almost 8% all in one day there. Communication services headed back towards the 50-day moving average. That's 3% gain on the day. That's going to be Netflix. That hit your new highs today, new 52-week highs. Two of the other big ones in the mix, Facebook up 2%, and Alphabet, GOOGL, back to the 200-day moving average, 4.5%. Take-Two, by the way. Strong day, 2.3% gain on the day. That's giving old Cody over there, his stock madness there is one of his picks there going against Microsoft, giving it a bit of a run for its money in the short term. Though Microsoft had a good day. I'm just saying, Take-Two's giving it a bit of a run for his money. All right, looking around elsewhere, you got the price of oil down 7%, nearly hitting new 52-week lows on the day, but really, really weak. There's a lot of demand, a lot of supply out there, not a lot of demand right now. We're just not flying places. We're not driving places. We are not filling up on gas as much because we're sitting at home watching Twitch all day or whatever you guys are doing. So that's what you have there. Airlines, a little bit higher on the day as well. United Airlines stands out as one of the better performers, up 7%. Apparently, they've got a new deal with the government. It's ridiculous, but a new deal with the government on the funding that they're going to get. They didn't like the terms of the first one there. Aww. They didn't like what the government was handing out to them, and they wanted to change the deal, and they got their way, basically. Delta Airlines, another one that benefited from that, up 5.5%. American Airlines, not as much, up 3%. Still a good day, but that one didn't participate as much. And names like JetBlue, not quite as much as the overall other sectors there. Let's go through some stocks. We got J.P. Morgan in the mix here. J.P. Morgan reported earnings. They missed on earnings by $1.42. Big miss there. Revenue's already lower than expected, and they raised the amount of cash that they're putting aside for people that aren't going to pay their loans, right? So they put that aside. I think this was kind of offset by their trading division. If you ever look at their trading division, the screen will catch up there hopefully in a second. I don't know why it does that. Hopefully that's not a big deal. Yeah? No, it's giving me a little grief there. The trading division, record gain for them. This is the traders for J.P. Morgan, and then what they trade for their clients. Up 32%, record revenue of $7.2 billion. That's a record. They've never done that before. So I think people miss that part of it. That's a huge portion of their revenue. That looked good there as well. I don't know. We'll see what's going on there. Am I going to be able to get this in here? Not going to be able to get that in there anymore. She is frozen. Oh, bummer. All right. Oh, that's... Nope, but it's not updating. I just thought I'd try. Got to try, you know what I mean? Anyways, so what do we have here? You got Boeing a little bit lower on the day, down 4%. They lost a lot of orders. 150 737 MAX airplanes have been canceled from production. Can you blame them? A couple different airlines there canceled their orders. Discovery Financial was down on the day. Capital One, American Express, they were all lower on the day. Wells Fargo reported that credit card spending has essentially come to a halt for the first quarter, and so that hurt your credit card processors, things like that. As far as the S&P goes, you got 30% of the S&P 500 above the 50-day moving average. That's 152 stocks. We have not seen that in a while, so that's good to see if you are a bull. You've got new 52-week highs. You got 8 of them today. Newmont, again, was in the mix. You got Netflix, we already mentioned, Walmart, and Eli Lilly. Amazon was a new one that got added to the mix today. I think we're going to just probably tweet this out or put it on Instagram. It'll go on our YouTube comments as well. I put together a chart for you to show you all of the stocks that are above their virus high, that February 19th high. There's a whole list of them there. Regeneron, Newmont are some of the leaders there. You got Market Access, Clorox, Gilead Sciences, Cabot Oil, General Mills, Netflix in the mix, and now Amazon is in the mix too with their 52-week high today. Did really well. Really well. No 52. Oh, by the way, in the S&P 5, if you think like, oh my God, all these stocks, they're making new highs, they're above 50-day. Do you feel left out? Do you feel just a little bit left out? That's supposed to happen. You're supposed to feel that way. The difference between this market and every other market is it's happening fast, right? So on the way down, what happened? Don't lie. A lot of you felt like, this is horrible, right? I'm going to lose all my money. This is crazy. I don't know what to do. You felt it because it happened so fast, right? Panic. fear, right? I get it. But on the way up now the tide has changed. You flip the script a little bit and you're like, am I missing out on this bounce? Shoot, do I need to get in now? Imagine that happening millions of times all over the country and all over the world, and people are forced to start buying this market. That's why you've got the market sort of creeping up faster and faster and faster and faster. Those are people that are diving in for fear of missing out. Do you feel like you're missing out? I know you do. Come on, you do. The markets are they're at where they're at because of emotion at this point. You also have the argument that, hey, because the Fed's going to do whatever, I don't want to fight the Fed. Maybe I should go ahead and get in this market. And that's leading to this V-shaped recovery, which I maintain you do not want. You do not want a V-shaped recovery. No. Those are not very good ones to have, but that's currently what we've got. We're working with it. You got 0 new 52-week lows. Franklin Resources continues to be the one that's closest to lows. Got 6% drop, would put it at new 52-week lows. And Western Union is the second closest. They would need a drop of 16% to give you an idea of what stocks are closest to making 52-week lows. Talking about the virus-related news out there, there's still a lot there. The White House is working on a plan to reopen the economy. You've got 10 states already forming, like I mentioned a minute ago, different agreements, different sort of pacts, if you will, with the government to work on getting reopened again. That's what they're working on there. If you haven't got your stimulus check yet, I've heard pretty much everybody that I've heard of has got their check. If you haven't got the money in your account, either you're not qualified and you're not going to get it, or you'll get it by Wednesday, according to the Treasury Department. So hang tight, it's coming, should be there tomorrow, actually would be the day. Amazon's going to allow third-party sellers to start selling non-essential shipments again, or shipping non-essential products on their site. Apple ships 2.5 million iPhones to China in March. Tesla is asking landlords for rent reductions. Isn't that cool? If you're a company, you get to just be like, look, I know we were going to pay you this, but given the times, we want to pay less. I don't know how I feel about that. Disney has taken out $5 billion in credit cards, right? I try to relate corporate finances to your personal finances, and that's what I mean by that. It's a revolving line of credit, which is essentially a credit card for the company. They've taken out a $5 billion credit card. Imagine that. You go get a credit card, and Capital One's like, well, how much do you need? And you're like, $5 billion. That's what I need. Burlington's offering $700 million in convertible notes. A little different than the debt we've been talking about lately from Carnival and the like. These are convertible notes, meaning they'll pay a lower interest rate. I think it was 2.25%, but you can convert it to shares if you decide to after some period of lockup. Dick's Sporting Goods is also offering convertible notes, but $500 million, not quite as much as Burlington there. Plug Power is going to offer $75 million more in common stock. So they're just going to sell $75 million in common stock. I don't like that. Marriott's got a new credit line, basically credit card of $1.5 billion. $1.5 billion. That's incredible. Hey, did you guess our stock on Instagram and Twitter? Hey, did we post that on Twitter? It's on Twitter. It's everywhere. Yeah. Oh, and probably on YouTube, right? It's on YouTube. I got a guy. So here's how that goes. We put up a stock and we said, can you name that stock in the financial sector that reports this week? It beats on earnings 86% of the time for first quarter earnings. It averages about a 1% gain on earnings day, and it's positive 79% of the time. So there's a little picture of a graph. It shows all the different things on there. If you want to check that out on our Instagram, maybe you throw us a follow. I don't know. You see what happens over there. But if you guessed Morgan Stanley, you guessed correctly. They will report tomorrow in this case. As far as other banks and stuff that's going to report earnings tomorrow, you got Bank of America. You ready? You got a pen? Bank of America, Schwab, Citi, Goldman Sachs, Morgan Stanley, PNC, U.S. Bank. Those are the banks that report. And then you've got United Healthcare, Bed Bath & Beyond is the one. Reports tomorrow. And Las Vegas Sands. You also got the Fed's Beige Book coming out tomorrow. That'll be interesting. Maybe cause a little volatility in the afternoon. And congrats to Yeti. Yeti is getting its place in the S&P 600. Yeah, that's the company. The guys with the coffee cups, the really expensive stainless steel cups that everybody here in Florida has. They sell coolers and all kinds of other stuff as well. They spend a boatload on marketing, but who am I to say? It's maybe working for them. Up 16% on the day. They're getting their place in the S&P 600. Congratulations to them. Yeah, I'll take a chance here and try to answer some of your questions. Otherwise, I think I got everything faster than I was hoping to there. So, nice. You feel like you're missing out, but then those old unemployment numbers kick in and you go, okay, I'm doing all right. I love it. All right, you got your, oh man, you got your $2,900. So you got a child in there, and you got you and your wife, $1,200 a piece plus the child. Yeah, man. All right, what you gonna do with it? Are you torn a little bit? I gotta be honest, I would be sort of torn. Like, you're just given this money, not taxable, you don't have to do anything with it, you're allowed to do whatever you want with it, but aren't you kind of sort of torn between like doing something fun with it, or saving it, or investing it, or whatever, and maybe doing the ethical thing and like helping somebody, going to a small business, buying something from a small business, maybe paying a little bit more? Just kind of, a little bit. No? Some of you are probably like, nope, the money's gone. While other people, maybe you donate it. I don't know. It is a different one. Before, in the financial crisis, when we all got paid, I got that one. When we all got paid back then, it was $1,200, I think, as well. You didn't feel so bad. You were like, oh, getting this money because the bank screwed up everything. This time it's like human lives, the human businesses, things that you guys are affected out there. Kind of makes you want to do something with it, huh? I don't know. I've heard that. Yeah, some people have said they're just going to give it to their church when they reopen. I've seen some people say they're just going to go on a spree. Small businesses go to a tourist area and just buy up a bunch of stuff that you don't need, knickknacks and things. Yeah, I applaud that. I think that's definitely admirable. It's certainly something where if you need it to survive, that's of course what it's for, right? You go survive, do what you got to do. But if you're one of those people where you're like, I didn't ask for this, I don't really need this, I mean, kind of makes you think a little bit. Is owning gold or silver a good idea? Not in the long run. You can certainly trade it. It's a good trading vehicle, especially in volatile times. Historically, though, it is not one. You're better off elsewhere. You can pick a whole slew of different asset classes, different investments that would do better in terms of return, but it depends on where you're at in your life. If you're trying to be super protective of it, I mean, it doesn't pay a dividend or anything, so that's something to consider. But if you're trying to be really safe, or you're doom and gloom type person, I don't make fun of those people, but if you feel like things are going to get really bad and the price of gold's going to go up, then, that's your belief, yeah. No check yet. Oh boy, because everybody's saying, it's not my fault. I'm not the one giving you the check. Wednesday, the Treasury Department says Wednesday, tomorrow. Check your bank tomorrow. And that's for 80 million people. So even if you're left out of that, maybe by the end of the week or something, I don't know. I'm just reporting the news. I love it. I love it. No comments on Bitcoin. I don't really follow it. I see it's been weak lately. It's supposed to be the inverse sort of product to trade relative to the market. That didn't prove to be true. I would think longer term Bitcoin investors have to be concerned about that. That was supposed to be your gold replacement, but more sneaky, and of course outside being U.S. dollars, and it just didn't work. It just didn't work. No check. Oh man, everybody's mad. All right, in your Roth IRA for 2019, I'm answering questions on YouTube, by the way, if you're watching us elsewhere. In the Roth IRA for 2019, you contributed $6,000, but not all of it in stocks. Some of it's in the money market fund. You're waiting for the markets to go down. Is that okay, or to put it all tomorrow? Put it all in tomorrow, tax day. You don't. Well, first of all, if you already put the money in, then that's it. It's already in. It's been contributed for the year that you marked it for. So you don't have to actually invest it to make it count for 2019. Just purely making the deposit is what counts, the date that you made the deposit. So if you're saying you put $6,000 in for 2019, you can let it sit in cash all you want. If you believe the markets are headed lower, there's no rush. Also, if you haven't contributed it, technically tomorrow's not the day. Tax day is not tomorrow. Tax day is officially July 15th. So you would still have time to make those contributions. Yep. Andrew got a call scheduled with us tomorrow. Well, that'll be me tomorrow. Look forward to it, man. That's I got the calls tomorrow. Aaron, is a U-shaped recovery best or a W? I'll take either, but a U-shaped is always better. You want to see a slow turning of a ship, right? Imagine how nasty that would be if you tried to turn a cruise ship, just turn it, and it's done, like in less than 2 seconds. That's not going to be very safe. It's not going to feel very good. You turn a cruise ship very slowly. Everybody's safe. You almost don't even know it's turning, right? That's the kind of recovery you want to see there. Yep. Is there typically more volatility during earnings? Absolutely, and you can even measure that. We covered some of that on the Outside the Virus show at 3 o'clock, so if you want to check that out, it's on our YouTube channel, of course, but Yeah, absolutely. More volatility. And this one in particular, a lot more. Yep. Manny's asking, is the stimulus check based on 2018 or 2019's filings? If you haven't filed for 2019, then they're using 2018. If you've already filed for 2019, then they're using 2019. So if for some, I'm not, I guess, telling you to do this, but it would make sense that if in 2019 you feel you're not going to be qualified for the check and you don't have to file your taxes until July 15th, but you really need the money, it would make sense that you wouldn't file your taxes until you get paid, because they'll use last year, assuming last year you did qualify. Just, you know, it's just strategy, right? I don't know if that's an ethical thing to do, but that could be strategy. What do you think about TAL education? It's held up nicely. Yeah, I mean, it's held up nicely here overall. One of the Chinese education companies that went public a while back held up nicely compared to everything else. You can't argue that there. So, yeah, I mean, if I owned it, I wouldn't do anything with it. I'd be pretty happy with where it's at. Yeah. Yeah. All right. I think I've covered it all there. Try this one more time. Yeah, she's frozen today. I don't know what happened. Do we have a virus fund? That'd be interesting. No, we're not active traders here, so not something we offer, but I wouldn't be surprised if that was offered somewhere out there or has not already been offered. Dick's Sporting Goods, by the way, is stopping all of their dividends and buybacks as well. So if you own that for the dividend, that's no longer. And Roku is seeing an increase in streaming. I'll be one of them. I was on Roku the other day. We're on Roku right now, actually. We streamed to Roku, and I was trying to watch myself. So that's what I was doing. Hey, anyways, have a great rest of your day. I'll wrap it up there. I appreciate you guys watching, and subscribe button, all that stuff, if you would. I appreciate that. We'll be back tomorrow to do this all over again. Have a great rest of your day, and check out our new show, Outside the Virus, on our YouTube channel there. Should be posted and ready to go for you. Enjoy.
Hey, wait! Before you go watch one of our other great videos, have you had a chance to see our new Fin Tips videos? They focus on one topic at a time, covering investing, personal finance, and anything that can quickly help you with your dough. Best of all, we'll keep it real short, because we know time is money.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.